This conference will now be recorded.
Good evening, everyone. I would like to welcome you to the First Advantage Home Equity Line of Credit webinar with our special host, Jen Register. She's the Chief Lending Officer here at First Advantage. Today's presentation will be in listen-only mode, which means you will not be able to interact with the speakers verbally. Please use the chat feature located at the bottom of the screen to send over any questions you may have, and they will be answered at the end of the session. This webinar is being recorded, so please do not unmute yourself. You will be able to listen to this recording at a later date once it is available on the First Advantage website at firstadvantage.org. Without further delay, I'd like to turn it over to Jen for our presentation.
Thank you so much, Amber. I really appreciate it. And thank you not only to Amber, but to other members of our team, Annette and Jessica. We have such a fantastic group in marketing here at First Advantage, helping get this webinar set up, as well as helping me to get this PowerPoint set up. And I really appreciate all your help. Thank you all so much for being here this evening. Really excited to talk about home equity lines of credit. When I was brainstorming on some of the topics that we could put into a webinar regarding lending, the top of my list was home equity lines of credit. This is one of my favorite loan products. Probably pretty dorky, the fact that I have a favorite loan product, and definitely a lending dork that I have a favorite loan product. But hopefully tonight we're going to cover a lot of the important stuff. Some of those questions you might have in the back of your mind if you're wondering if you might qualify, what can you use the proceeds for, those sorts of things. We're going to talk about all of that tonight. And so let's go ahead and kick it off. Just a little bit of information about me so that you are familiar. I'm sorry. Technical difficulties. I'm trying to advance my slides. There we go. I found it. Amber was actually rushing into my office to save me, but I was able to make it work. So on your screen here, you have me and my family. I am the Chief Lending Officer here at First Advantage. I have been in the banking financial institution space for close to 15 years now. I interned at First Advantage and worked there after college. Went to work for a community bank for a while and have now been back at First Advantage for almost 3 years. My little daughter in this picture here, she will be 3 years old on March 1st. And I came back from maternity leave to come work at First Advantage. I am a graduate. I'm a local, so I'm a graduate of Denby High School, the College of William & Mary, and I got my online MBA at University of Tennessee. And as I stated, I'm a wife of two. I'm a wife and a mother of two small but very quickly growing children. All right. So moving into the important stuff, what we're going to be talking about today. So some of the questions I'm hoping to answer is, what is a home equity line of credit? How does it work? Will I qualify? What can I use it for? Why do I want it? And hopefully at the end, you're going to be asking, how do I apply? And we will definitely get there. So to kick it off, what is a home equity line of credit? Well, essentially, a home equity line of credit is a line of credit secured by your home that gives you a revolving credit line to use. The amount of equity in your home helps to determine the amount of HELOC you would qualify for. Essentially, what your home is worth minus any existing liens or your mortgage, that tells you that's the equity that you have in your home that you could be using and could be securing with a line of credit. To detail that a little bit further, let's talk about how it works. So a home equity line of credit works similar to a credit card in terms of the revolving nature. So just like a credit card, when you use it, you pay it back, then that amount becomes available for you to use again. A HELOC works very similar. As you pay it down, you have additional funds available that you can use. It's easy to access here at First Advantage. You can transfer funds from your HELOC in online banking to your checking or savings account. That's one of the easiest ways. We do also offer checks. So if you're doing home improvement or paying for education, anything like that, you can write checks directly off your HELOC. So we have both those options available. It's also at a fairly low interest rate. There is an asterisk there because it is a variable rate and it's based on Prime, the Wall Street Journal Prime to be specific, as well, and then includes a margin in some cases on top of that. So right now, Wall Street Journal Prime is at 3.25. So we do have rates other than our promo rate starting as low as 3.25. But again, it is a variable rate. So it can be a very low interest rate, very easy way to access funds on a large scale. Moving on, will I qualify? This is a very important question that a lot of people ask because you might have bought your house within like the last 5 years, so you think maybe the loan to value is not there. You're not really sure. Maybe you have to have A+ credit to qualify. And then debt to income is another factor that we consider. So loan to value, we actually will go up to 100% of the value. Now, to be able to get some of the best rates in terms of the HELOC, we do like to see that at like 90% or below. We'll take a look at what that means on our next slide. But loan to value is something we consider. Values have been going up in our area specifically. So even if you didn't think you had value a couple years ago, you might have the value there in your house that you could borrow. Credit history is definitely something we consider, but right now we do have a promotion going, and it doesn't require you to have A+ credit. Our promotion has promotional rates available in multiple credit tiers at multiple loan to values. So I highly recommend putting in an application, and we can definitely take a look and see what things look like. On the debt to income side, this is something else that we're going to take a look at. So we look at what your income is and what your debt is against it. Where this is a benefit is we don't have a cutoff for minimum income. So if you don't have a lot of debt, just because you don't have a lot of income does not mean that you wouldn't qualify still for a home equity line of credit. But again, these are the three biggest factors that our underwriters are going to take a look at: loan to value, credit history, and how much your monthly debt is compared to your monthly income. So talking a little bit more on the loan to value and explaining that a little further, I've got a nice slide here for you. So this takes a look at a house valued at $250,000, and it looks at how much you would be able to borrow up to depending on what loan to value you're going to. So looking at this first graph here, we have an 80% loan to value. So that means you are borrowing against your house up to 80% of the value. So in this case, if the home value is $250,000, 80% of that is $200,000. So if your current mortgage is $150,000, then you would have $50,000 available for a home equity line of credit. We carry a similar example through for 90%. So if your home value is $250,000, in that 90% category, 90% of your home value would be $225,000. Again, I've done the formula below here. So essentially what you're doing is multiplying your home's value by either 0.8, 0.9, or in the case of 100%, multiplying by 1, since you're going up to 100% of the home's value. Again, listing what the current mortgage is. So in this case, $150,000. And so in a case of a 90% LTV on our example here, you would have $75,000 available for equity, for a home equity line of credit. Hopefully that makes sense. If it doesn't, please shoot me a question in the chat and I will be happy to answer it at the end. I know sometimes this can be somewhat confusing for individuals who don't work in lending every single day, but it should give you a good idea of what equity you might have available for a HELOC. Moving on to the next part of our presentation, what can I use it for? It was interesting. I was talking this morning to my husband about the fact that I was going to be doing this presentation and what it was going to be about. And the one thing that he mentioned, because we're talking about getting a HELOC. We just bought our house almost 2 years ago. And so we're talking about getting a HELOC because values have gone up. Now we have the value to be able to get a home equity line of credit. And the one thing he mentioned to me was, you know, I didn't realize that you could use it for things other than home expenses. He thought it was only for home improvement. And so many of our ads target that. And a lot of people do use HELOCs for home improvement. But you can actually use HELOCs for almost anything. We do have some items here, this beautiful kitchen that I really like, except it doesn't have enough cabinet space. I would need probably a lot more cabinet space. And I don't think I keep my shelves that clean. Love this back porch. It's really pretty. I want those twinkle lights on my back porch. We have a hole in the roof. Sometimes in our area we get storms and unfortunately they can do damage, and they can do a lot of damage to a lot of places. And so you are going to be able to get that contractor first and foremost if you're the one that has check in hand. So a HELOC would afford you that peace of mind and that opportunity. We also have books here. So if you were to use it for your children's education, your own education, again, you can pretty much use a HELOC for any type of purchases. There is one thing you cannot use it for, and that's my next slide. It must be legal. Cannot use the proceeds from your HELOC for something that is illegal within our country or within our state. So again, you can use it for pretty much anything, but it does have to be permitted by law. It has to be a legal purpose. Usually that's self-explanatory, but you know, for purposes of our presentation, because we're all about disclosures, have to add that in there. Moving on to our next slide. Why do I want one? There's a lot of reasons. First and foremost is peace of mind. Having that line of credit there, you don't have to use it. If it sits there, again, I didn't touch on this as much as a similar to a credit card, but just like that credit card that you have that you got at the store because you were going to save 15% on whatever your purchase was, just like that store card that you haven't used in 5 years, but still happens to be sitting there, you have the peace of mind that it will sit there. It will not cost you anything to sit there. And if something were to come up, you would have it sitting there as your back pocket liquidity that you would be able to take care of that large purchase if you needed it. It saves money in that you aren't scrambling if an emergency were to come up to get a personal loan at a much higher interest rate. It saves money because it does afford you that lower variable rate interest. Saves time. Again, going back to that scrambling, a lot of times when we need to borrow, it's quick and it's something that has popped up. You know, sometimes it's in really bad situations where you have a family member who passes unexpectedly, and all of a sudden you need $10,000 for a funeral, and you need it tomorrow. Having this affords you that time. You know, that's not the time that you want to be applying for a loan or a line of credit. You want to have that time to be focusing on what's important. And so in this case, having a home equity line of credit already established, waiting for you when those unexpected emergencies come up is, you know, just the wonderful peace of mind that you need. And my last bullet point here, in my opinion, again, I told you home equity lines of credit are my favorite lending product. I think it can increase your joy. Now, the important part is you have to be capable of experiencing joy, and you also have to spend the money on something that brings you joy. But in that respect, technically, it can increase your joy. Most importantly, though, peace of mind saves you money, saves you time. All right, moving on to a slide regarding a special that we do have going on here at First Advantage right now. We have a special that is 2.49 for 6 months, and then as low as 3.25 thereafter. Does require an initial draw of $10,000 at closing, but there are no closing costs. I will tell you, we also have a regular line of credit, does not have the special 2.49 rate, does not require an initial $10,000 draw at closing, but in the case of that line of credit as well, there are also no closing costs. Caveat to that is depending on loan amount, depending on loan to value and how much you're trying to get, there is a chance that we might have to do an appraisal. Those are not often that we are requiring an appraisal. It comes up every once in a while. If we do have to do an appraisal, that is something you'd have to pay for. Otherwise, we typically can pull an online value of your home, and we can use that for the evaluation, which again, it would roll into that no closing costs. So up to, and this is up to line amounts of $150,000. So again, having that additional $50,000, $100,000 line sitting there for you, I think is just fantastic peace of mind. Also helps you to do those home improvements, even though that's what everyone thinks that it's for, but it does give you that opportunity to use it for home improvements and then pay it down. Our home equity line of credit offers a 10-year draw period, so you can draw against it, pay it back, draw against it, pay it back for 10 years. At the end of 10 years, it moves to a 20-year term loan. So then you have 20 years to pay back any existing balance that's on it. Or you can refinance it into a new home equity line of credit. On ours, the no closing costs, again, it really is no closing costs. You just have to keep the line of credit with us for 36 months. That does not mean you have to keep a balance on it. We would love for you to keep a balance on it, and we'd love for you to use it for the purposes intended, but there is no requirement that you use it. Just that you keep it with us for 3 years, or else you do have to repay those closing costs. All right, moving on to one of the most important slides that we have, and that is how do I apply? Well, at First Advantage, we try to make it as absolutely easy and most convenient as possible. We have an online application. So while I'm talking to you right now, if you liked what you've heard, if you are interested, you can go directly to our website. Up in the top right corner, you can apply for our equity line of credit. You can actually apply for any type of loan. We have online applications for all of our loan types on the consumer side. So car loans, personal loans, we have a great personal loan campaign going on right now as well. We also have a great refi campaign. We're all about some great promo rates for you guys. But yes, you can apply online or you can apply on our website using your mobile device. We also can take applications over the phone. So if you prefer not to apply online, but it isn't convenient for you to get into one of our local branches, you can apply over the phone. and our phone number is listed right there. We also, like I mentioned just now, you are welcome to go into one of our local branches. All of our branches are currently open, and although sometimes that varies depending on staffing, but generally they are open normal hours, 9 to 5, Monday through Friday. We do have some branches with Saturday hours, and you're welcome to go in there and apply with one of our wonderful loan officers, and they can walk you through the process fully and more in depth. All right, that was a lot of information very quickly, and I noticed in the chat we do have questions. So let's take a look. All right, I'm scrolling back to the top here. What if I don't have a mortgage? Great question, Dee. If you don't have a mortgage, you have a lot of equity in your house. And yes, we absolutely do home equity lines of credit in first position. And again, we can do a home equity line of credit with no closing costs in first position, up to the value you have in your house, or $150,000, with no closing costs. A question about, is this for first-time home buyers? So technically, if you have bought a house or you're looking to buy a house, this is certainly something that we can look at doing. Typically, HELOCs we cannot close in conjunction with your purchase, but it is something that we can close very quickly after, and we'll have all of the information we need. So if the equity is in your house and you're a first-time home buyer, it is something that we can do for you fairly quickly as well. Is there a fee for paying it off early? That is the, I did sort of answer that. There's no fee there. We don't have an early payoff fee, but if you do close it within 36 months, it doesn't have, you can pay it off at any time. But if you actually close it, you do have to repay any closing costs, and that's within the first 3 years. Next question is, what does it mean to have an initial draw? That means when your loan funds to the system, so we're going to close your line of credit. Regulatory wise, we have to allow you 3 days to think about it and make sure you're still comfortable with the fact that you closed on that line of credit. And then after 3 days, we will book it to our system. And at that time, you have to draw $10,000 off the line. And that can go into your checking account, then go into your savings account. We can make a check payable to a contractor, to an educational institution. The sky is the limit, but you do have to use it. You do have to take that draw when the loan closes. And again, that's for the $10,000. Oh, that answered the next question here. And again, that's for the promotion that we have, the 2.5. We do offer regular HELOCs. Again, the starting rate on those is the 3.25 variable rate. And those do not require an initial draw at closing. If you are just looking to get one of these for peace of mind, it does not require an initial draw at closing. What is this credit score required? We do not have a credit score requirement specifically. We have rates and lines of credit available across the credit score spectrum. So it's hard to say because we don't decline outright just based on credit score. The best answer I can give you is to apply, and we can have a conversation with you at that point on what we are able to do, if we're able to do anything. And we can also, we've got some great experience on how to help you. If you are credit challenged, we can help you with getting your credit score up. The credit score requirement, though, for our 2.49 special is 720. Again, as I alluded to, we have specials for everything from 640 and up. for our promotion. Now, those aren't going to be at the 249, but we do have special rates available for everything from 640 credit score and above. But that is not a requirement for doing a loan with us or a line of credit with us specifically. If you sell your home and the HELOC is drawn on, can you keep the HELOC open? No, unfortunately, if you sell your home, the HELOC does have to be paid off with the sale of your home because it is secured by your home. But we could certainly look at doing a line of credit against the next house that you're purchasing. Or we also have personal line of credit products available, and we could look at rolling that to one of those products. I did have a question about using the $10,000. Again, you can use the $10,000 for whatever you would like. Just has to be legal. It can go sit in your savings account, or you can use it for home improvement. But again, that is for our special. So to get the special rate, you do have to take that initial $10,000 draw. But in terms of what you use it for, that's completely up to you. If you get a HELOC and don't do a draw, do you have to make a payment on the amount that is set aside for the loan? No, absolutely not. Again, this goes back to the comment of a HELOC being like a credit card. So just think about those credit cards that you have out there that you don't have a balance on. That is how a HELOC functions in terms of payment. So if you have your HELOC, you don't have a balance on it, no matter what the line of credit amount is, you don't make a payment unless there's a balance on it. Just like a credit card, you only make a payment if there's a balance against it. If there's no balance against it, you don't have a payment that's due. All right, that is the last question that I have in our chat right now. Oh, a couple more popped in. Awesome. We do have, let's see. You stated that you have to make an additional draw of $10,000. How soon can you pay it off? Well, I would like you to wait and pay it off, a while from now, because we want you to use the funds. However, there is no minimum time. So you do have to take the initial draw at closing, but there is no maximum time or minimum time. I'm getting that wrong. It's been a long day. But that you have to have it outstanding in terms of when you can pay it off. How long is the term life of the HELOC? So as I mentioned, the draw period, so you can draw against it, borrow against it for 10 years. So borrow it, pay it back, borrow it, pay it back, borrow it, leave it out there. Completely up to you how you use it, but it's open as a line of credit for 10 years. After 10 years, you do have to, you move to a repayment phase, or you have to refinance the HELOC. So during the repayment phase, whatever's left on the balance of the HELOC, that will, you will pay that off over the next 20 years. That's how they'll determine the payment. Will be based on the balance and what the current rate is and how long it would take to pay it off in 20 years. Oh my goodness, I'm getting so many questions now. This is fantastic. Do I have to have a mortgage with First Advantage in order to apply for this loan? Absolutely not, no. You can have a mortgage with any lender out there, and we can absolutely do a HELOC behind it. So no, you do not have to have a mortgage with First Advantage for us to be able to do your HELOC. Do I have to provide an appraisal? No, you do not have to provide an appraisal. Again, as I mentioned, in most cases, we just pull an online evaluation. And in that case, it's very simple and very quick, and we will get a value of your house. If you think that we should be getting a higher value, or if the amount that you would like to borrow is outside of regulation, so if it's over $250,000, then we will require an appraisal, and you do have to pay for that. However, we will order it for you. We will take care of that piece of it, but you would have to pay for that. The variable rate is based on the current rate at the time of draw. No, the variable rate is based on the index, which is the Wall Street Journal prime rate. So when the Federal Reserve meets, they raise the prime rate, lower the prime rate. Last year, they lowered it all the way down to what's considered at this point its lowest point. And then the Wall Street Journal prime rate is just that minimum, which is 0.25 plus 3%. So right now it's at 3.25. As you'll recall, I believe it was from about 2009 to 2016, 17, it stayed at that minimum 3.25, then it started to creep up a little bit, and now it's gone back down. So it is based on that, and so your rate would change based on that index. Again, it's not one that changes daily. The Federal Reserve only meets like every month and a half, and they obviously don't change things too frequently, but that is what the rate is based on. I will say that because the rate is low, it is one of the best options for debt consolidation. You know, there's some great rates out there for debt consolidation, but you're rarely going to be able to get something lower than this. One more question that we had come in: if you borrow on it, do I have to fully repay it before I borrow more money on it? No, absolutely not. Again, going back to that credit card comparison, just like your credit card, as long as you have available balance, you can continue to borrow against it. So there is no requirement that you have to pay it all the way down. As long as there's amount available against it, you can continue to borrow against it. Here's a question: is there a tax advantage to having a HELOC? The answer I have to give you is you must consult your tax advisor. In the past, there has been, but again, as we know, tax law changes frequently, so there very well could be, but you do need to consult a tax advisor for that information. I had a question: if I completed a First Advantage refi within the last 2 weeks, do you have to pull my credit report again? Possibly, and I would say probably, most likely. We do have to pull credit if your original credit is over 30 days old. Now, if they pulled your credit at closing, we might be able to utilize that. But Deborah Smith, looks like they asked that question. Shoot me an email and we can talk through it a little bit more in depth. But it's possible we can use it, but I would say likely we're probably going to have to pull a new credit report. Do you have the option of locking in your rate? At this time, we do not have the option of locking in your rate. We are hoping to be able to provide something like that in the future, but at this time we do have equity loans available, which are at fixed rates, and you can lock in your rates on those. But we do not have lines of credit that are fixed rate in terms of HELOCs. All of our home equity lines of credit are variable rates at this time. I did have somebody who, obviously we're going through a refi boom right now, and so a lot of people are refinancing their houses. If you have refinanced within the last 6 months, there is a very good chance we can use the appraisal that you used for your refinance. We can use that appraisal again to get the value for your home for our home equity line of credit. So as long as the appraisal was pulled by another financial institution or by First Advantage, we typically, as long as it wasn't you personally that requested it, if it was requested by a mortgage company or another financial institution, and it's been within the last 6 months, we can likely use that appraisal for the value of your house. Do I apply online? How long is your HELOC special going to run? Well, we just announced our HELOC special, so I'd say you have at least 30 days. And yes, please apply online, and we will be in touch with you likely tomorrow as we work through our lines of credit. Or I'm sorry, as we work through our queue when our underwriters are back in the office 8:30 tomorrow morning. So yes, please go ahead and apply online, and you should hear from us tomorrow. What are the benefits of a line of credit versus a loan? Again, the flexibility is huge. A loan, you're borrowing a lump sum, that's it. You have your fixed payments, which, you know, those can be great and nice for budgeting purposes, but once you borrow that money, that's it, it's done. Whereas a line of credit, it gives you such flexibility. It also doesn't cost you anything when you have it just sitting there. And so it's a wonderful tool for peace of mind. So while loans definitely have a purpose, if there's something specific and you want to have that fixed rate, a loan can be a great option. But for a lot of other reasons, a line of credit is one of the best ways to go for that flexibility. All right, what other questions? These have been fantastic. I'm really excited to see all the engagement. Is this considered a second mortgage? Yes, this is a second mortgage, because essentially what it is a loan or a line of credit. It's a lien in second position on your home. So it is secured by your home, but it, again, if there's no balance against it, then there's no payment, and you're sitting in a really good position as far as the future goes. Thank you all so much for tuning in tonight. I really appreciate it, and I really appreciate all the questions. You guys have had some wonderful questions. I hope it's made things more clear as far as how HELOCs at First Advantage work, as well as HELOCs in general. And I do appreciate all of you being present. Again, I have my direct email there, so feel free to shoot me an email. Again, you see the small children. There's a very good chance if you shoot me an email tonight, you will not hear back till tomorrow morning. But I will definitely get back with you. Would the payment be based on the amount used or borrowed? Yes. Again, back to the credit card example, you are only, it's going to be based on the percent. Actually, in our case, it's interest only. So our HELOCs are interest only. So your required payment, although you're welcome to pay what you'd like, your required payment monthly will be the interest that is owed based on the amount that you have borrowed, the amount you've used, not necessarily it's not going to be based on the full line amount. It'll be based on the amount that you have borrowed against the line. All right, thank you so much. And as I mentioned, if you have any additional questions this evening, something wakes you up in the middle of the night, feel free to shoot me an email, jregister@firstadvantage.org. I will be happy to answer any additional questions. If you are interested, please go to our website, firstadvantage.org, and put in an application, and someone will reach out to you tomorrow with additional questions. And we'll get the process going for you. I will hand it back over to you, Amber.
All right, well, thanks, Jen. That was a lot of great information, and thanks again to everyone who joined us tonight. We are going to make this recording available on our website. It'll probably go up in the next few days. So if you're interested in rewatching any of it, we will make that link available. Hope everyone has a great evening, and thanks again. Bye-bye.